Hey everyone, it's Coram and Harold Morris here with your option of the day for Thursday, May 4th. And today we're going to be talking about a market trade, Harold, using the S&P 500 ETF SPY. So good to see you today. Let's go to the SPY chart and talk about the thesis behind this trade.
Okay, well, nice seeing you today, Ali, also. And it's with SPY, it's in a trading range, and it reached up to the top of the trading range, which is around 418. Now, when you're dealing with an ETF such as SPY, there's 500 stocks in that ETF. It mimics the S&P 500, so it's not going to be as exact as with the individual stock. So around 418, 415 is about where the upper end of the trading range is, and that's going to be very important when we look at the option chain and look at our break even. So we can go over to the if you're ready, we can go over
Yeah,
to
let's
the
do it. Let's walk through the
Thinkorswim.
trade setup. Sounds like a plan. So we're going to head on over there. And the first thing that we do, okay, we have the trade in mind. We have a thesis. And then we go to the Thinkorswim dashboard. We know our levels. And then we have to figure out what expiration we want to go with.
Right. So the first thing is the expiration, as you said, and I like to go out at least 45 to 60 days. So I'm going to go out to the June 16th expiration. So that's about 43 days out. I'm going to click on that. And with SPY, we have a lot of strikes here. So
Oh, yeah.
I could change that, but I like scrolling.
Yeah.
So I'm going to change that. And again, we have calls on the left side. We have puts on the left side. So we're going to be selling a call bear spread. So it's a bearish spread on SPY. So I'm going to start out with selling the 418 strike here. Click on that. And then I'm going to buy the 423. That's our protection there. So that's going to give us a credit. Now, based on my calculation, the credit I've calculated is 176. So I'm going to raise that up. So again, we're going to sell the 418. We're buying the 423 for protection. So that's our call spread. It's $5 wide spread. So let's take a look at the numbers here. So I click on my confirm and send, and we see our max profit. The max profit is the credit received. And then 419.76, that's our break even. So if this trade starts to go against us, we've had a long way to go before it actually starts really to work against us there. So our break even is a little bit above that 418, the upper edge of that trading range. So that's what I like about this trade here. So let's do our probability of success and look at the number of contracts we're going to buy with this trade. So I'll close this down, click on edit, and on the left side, I've got some notes here. So probability of success. So we first start off with determining what our actual risk is. To determine that, we just take the width of the spread, which is $5, $5 wide spread, minus the credit received. That's going to give us our actual risk of $3.24, or in option terms, $324. So that's our actual risk. Now, to determine the probability of success, we take the actual risk, which is $3 and I should actually say $324. I could just take that decimal out, but anyway, $324 divided by that width of the spread. That's times 100. That's going to give us a probability of success of 64.8%. So not bad as far as the probability there. Now, how do we determine the number of contracts we're going to buy? We're going to take something that based on our account size, we have our position size, we know how much we're going to risk. So if the trade goes totally bad, it's not going to affect or have a huge effect on our overall portfolio. So we decided $2,500 is what we're going to risk. So we take the $2,500 that we're willing to put into the trade, divide it by our actual risk. That's going to give us 7 contracts. The actual number 7.2, but 7 contracts. So let's change the number of contracts here. So I'm going to raise that number up to 7. And then let's go back over to confirm and send. We can see our numbers again. So again, the actual risk and it's not going to be exact, but it's pretty close. Yeah, and then that break even. So, and I also like the profit there. So that's our max loss, our profit. So um, we're just risking that roughly $2,500 to make that 1,200 plus. And I'm just going to click on confirm. I'm just going to click on send. I'm going to send the trade off. Hopefully they get filled. Hopefully it works out like the GLD trade did last week.
Yes, you were updating us on IBD Live yesterday about that trade, which was another risk-defined trade, looking at a range, and yeah. So we're happy to see that, Harold. And so I want to go back actually to Marcus Smith really quickly, so we can briefly look at the daily chart of SPY and talk about that area where we did see that rejection at the highs a little bit closer. So
Right.
here's that 418 level, which we looked at on the weekly chart, goes back quite a ways. And so we got that rejection on Monday and have continued lower. So that's our break even, which is great. That not only does it make sense, the numbers as an option trade, but also from a technical perspective as well, because if it does end up getting above that 418 level, then that would mean the thesis is wrong. But at the end of the day, this is a risk defined trade, and we know where our line in the sand is to get out.
All right. So again, our break even was right around 419. You don't have to wait till it gets up there. So if it starts working against you, set some alerts. Maybe set an alert at 415. Maybe that's your line in the sand, and that's if it gets up to 415. I know the trade is working against me. I'm just going to get out and move on and look for the next trade.
Great. Well, thank you so much, Harold, for breaking this down for us. And thanks everyone for watching. Be sure to catch more option trade ideas and education on the Options Trader app from IBD. You can download that from the Apple App Store today. Again, for more trade ideas and education too. Thanks so much for watching, everyone, and we'll see you next time.